Hello, I'm Andy Agathangelo. I'm carrying out this video interview of Steve Middleton in my capacity as chair of the Secretariat Committee to the All-Party Parliamentary Group on Personal Banking and Fairer Financial Services. I am also, however, the founder of the Transparency Task Force, which provides the Secretariat to the All-Party Parliamentary Group. Steve, thank you very much indeed for having this conversation with me. As you know, the conversation is being video recorded. The video recording will be placed on the APPG's website and we'll be drawing attention to it through social media and so on. You're carrying out this conversation with me, Steve, on the basis that you have already provided a written submission to the APPG's call for evidence about the Financial Conduct Authority. Could I invite you, please, first of all, Steve, to tell me a little bit about yourself and outline just briefly to begin with how you came to interact with the FCA in the first place. Thank you.
Thanks, Andy. I first started in financial services in the late 80s, 88, 89 at CIS. And I was there for around about 5 years. It was the time when the FPCs were just coming in. So for the first time, formal qualifications were being required to be a financial advisor. And I left there, then went on to Barclays, where I worked for circa 6 years, largely advising in the corporate and high net worth markets on investments, pensions, those type of things. And leaving there in 2001, I then went to work for a small IFA firm, and then shortly afterwards set up my own firm. And this was just after FSMA obviously came in back in 2001. So I worked through a network as an appointed representative. So effectively the FCA were in the background at that time, but then later on I did come to have some very direct interactions with them.
Thank you, Steve. On to question number 2. What role were you in and at what firm when you blew the whistle?
I first blew the whistle in around about 2005, 2006, when I was working in my own firm as an IFA. And that was where I raised concerns that I knew other members of the network were repeatedly churning people's investments, effectively literally setting pensions and investments at 1 year and going back the next year and reselling the whole product again. And it was around the time when stakeholders first came out as well. They were completely abusing the system. And I raised that direct with the network and with the compliance teams.
Thank you. That wasn't the only time you blew the whistle. Tell us what other times that's occurred.
Yeah, that didn't go down well at the time. I remember getting very little response and effectively being told to mind my own business back then. And I didn't take it further at the time. I didn't really have that much knowledge about how the group interacted with the FCA or what they did behind the scenes. The next time I really kind of blew the whistle about my concerns was in relation to interest rate swaps back in 2013, where a contact of mine, a business contact, asked me to look at this interest rate swap he'd been sold by RBS. And although I didn't sell those type of products, obviously I was aware of derivatives and structured products and similar types of schemes. Having read through what had been sold, I effectively just went back to him and said, you can't have bought this under the rules, under the existing MiFID and COBS rules. You can't have bought this in the way you've bought it. And I thought very helpfully started writing to the FCA. I wrote to Martin Wheatley and raised my concerns about undisclosed credit lines, the MiFID and COBS breaches, and effectively stating that from what I had seen, these RBS sales must all be torn up. They were starting an IRHP review at that time, but I said it would seem pointless taking people through a review because it was just a direct breach of so many rules that they didn't need reviewing. They should all be torn up.
So for those that don't know much about the IRHP market or scandal, could you help people understand a bit more about what was wrong in terms of the nature of the way that the sales was taking place?
People were either advised or effectively told as a condition of lending to take a fixed rate on the loans. Now, there's nothing wrong with fixed rate loans per se, but these were often long-term fixed rates. And back in 2007, 8, when these were very much being pushed, we'd had a long time of boom in the economy, and the majority of people would be forecasting that things were going to get more difficult, and there was a likelihood of interest rates you would expect decreasing. But people were being told they could buy these fixed rates to protect them because rates were volatile. And what happened, certainly the first case I looked at, it was a 10-year swap, and when the person came to see me about this, they were fixed paying between the margin and the fixed interest rate 8.5% per annum, when rates at that time were 0.5%.
And tell us a bit more, please, Steve, about what you did to raise awareness of the problem with the authorities.
Well, I wrote initially to Martin Wheatley, and I raised further concerns that because these were a complex contract and involved ISDAs, the international swaps and derivatives master agreements in the background, they also opened up the client's assets for the bank to leverage them. So the risk, as it stood officially, was an unlimited risk. And I just was quite horrified with what I'd seen. I'd spent 20 odd years selling investments to people with the intention of making them money. The idea that you could sell something which was just purely an investment and fully expect that people would lose money on it and you would be the beneficiary of all those losses was, to me, just absolutely abhorrent and against everything I'd been sort of taught throughout my career. So I wrote to Martin Wheatley. I got little response. They were concerned about the security issues I raised, but it didn't really go further. And then I began interacting regularly with one of the technical heads who would get involved in technical debates about the rules and commissions and various other things, to the point where what he was saying would not make sense. And at that point, he would just stop the conversation. It was just ongoingly frustrating because you could see that within this review process, the rules had been completely either ignored or they'd been bent by sales standards that were allowing the rules to be ignored.
Thank you. And when you wrote to Martin Wheatley, presumably at the time he was the chief executive of the FCA?
He was chief executive at the time, yes.
Thank you. So what happened after that, Steve?
I say I got a limited response about my concerns about the security. The other issues I raised, such as the credit lines, were largely ignored. That's when I went on to start raising them directly with people in the review process. And the initial things I was clearly raising was, the banks were putting credit facilities or credit lines in place for expected losses on these swap products and not telling customers. So the first person who came to see me had been sent to GRG because a £140,000 credit line he had no knowledge of had gone up to £500,000 in just over 2 years. And he first found out about it when he got an email confirming he was going to get sent to GRG because he was in breach of loan-to-value, acceptable loan-to-value parameters. So an undisclosed debt covering losses on an investment he had been sold to protect him had actually put 5 of his companies on the verge of going into oblivion.
For those that don't know, Steve, could you help people understand what GRG was all about?
Most of the banks had specialist units where, excuse me, if the business was deemed to be in trouble, they would call them a turnaround unit. GRG was quite infamous because they effectively would look to see how they could profit from customers. Customers were artificially distressed on many occasions. I've seen people where they've had payments bounce unnecessarily, things like these undisclosed limits that have created breaches. I've seen valuers go in and be instructed to value properties at 10% of the original market value. And then the bank has gone back and said, you're in breach of your loan covenants. They put them into GRG. GRG would then immediately start charging them monthly fees for looking after them, and they would re-gear all of the finance to suggest the majority of lending was mezzanine, and therefore they wanted rates of more like 10 to 15% returns. And this was at a time, obviously, when the credit crunch had happened. Few funds were around, and in reality, interest rates had been cut to try and help businesses in theory. And the banks were doing exactly the opposite and giving themselves an opportunity on many occasions to actually take the customer's assets where possible.
So from your point of view, Steve, what was the likelihood of somebody buying one of these higher HP products? What was the likelihood of them suffering as a consequence?
The likelihood of them suffering, I've never seen a product sold that didn't start with a negative credit line attached. So in other words, you were buying losses from day one. And that was because of the large commissions that the bank were taking on these. And when I say large commissions, if I sold, say, a £100,000 investment for a customer, I would normally receive a commission, maybe 3.5–4%, and a trail commission each year. So maybe £3,500–4,000. If you're doing, say, £1 million investment, it was more likely that you would maybe work on a fee basis because the commissions would become, extremely large. However, these products that bank managers were promoting were so valuable to the bank managers that I know for certain RBS capped their managers' income at 120% of the normal, because just one or two sales of these swaps could take a bank manager earning 50,000 a year to 100 to 110,000 pound in that year. That's how valuable they were as a product to the bank and the bank managers.
Thank you, Steve. What, if anything, do you believe the FCA could have done to deal with this matter? Everything. I originally got into a debate with Mr. of the simple fact that when MiFID came in 2007, that's the Markets in Financial Instruments directives, they were brought out, these directives were brought out to protect consumers from buying these very sort of products and taking these type of risks. But the first thing that it did was ban the sales of these products execution only. Now, the paperwork I had for this first person who came to see me quite clearly said he'd bought it execution only. Well, that effectively means an execution only sale is quite simple. You ring a stockbroker and say, I want to buy Barclays for £1.37 or whatever the rate is. You agree a commission, you do a deal. He's had no influence on your choice. You are literally ordering a product or an investment. That is an execution only sale. These customers had never heard of swaps, had never bought a derivative, knew nothing about them, how they were priced, what the risk was, anything, would never have even thought to ask for one. The majority of them were people who didn't normally fix their rates. So the bank came along, suggested it was not advising, but generally offered one of three products and promoted the swap as a no premium product, even though it had attached in losses and debts from day one. So effectively, the simple starting point was, I went to the FCA and said, RBS are selling these execution only, you have to tear them all up. And I got into a debate with for this, and he was saying it's non-advised. And I then said, well, sorry, but I've looked on your website, and on your whole website, there is one section on non-advised sales, and it's about, I think it was pet food or holiday insurance. And it was a 1-minute guide to non-advised business. I said, these are not non-advised. These are being promoted to people who've never heard of the product before and being sold as a no-fee product. And if you look at the paperwork, it says there's been sold execution only. So it's a simple breach of the rules. You have to tear them up. And he at the time told me that I was wrong. It was non-advised. And I suggested, surely the FCA could just go to RBS and get their compliance manual and see how they were selling them. And he refused to do it. Sometime later on, I came across, or I got, I think it was 7 of those manuals, and every one of them confirmed that they were selling these products execution only. What happened after that, Steve?
I ended up in a series of debates with Mr. because I kept suggesting that the big issue with the review, or the IRHP review, is it didn't take into account these negative credit lines, these undeclared credit lines that people were not made aware of. So you might be buying £1 million swap to cover or protect against a loan, but it might come up with an attaching £200,000 liability at the start, which was your liability, their expectation that you were going to lose 200,000 over that term. And as I say, that often went up to 300, 400, 500,000, even more, depending on the length of the swap. So I said, the sales standards have been designed to ignore contingent liabilities and these credit lines, and they weren't being dealt with in the review. And I said that was a massive issue because people in the review were not getting paid consequential losses. Well, that was based on foreseeability. So as I said to the FCA at the time, if you sell a customer an investment where you expect them to lose money, and actually you not only expect them to lose money, that's the losses are all your profit and are being booked as such, yeah, then it's entirely foreseeable that you're going to damage that business. And I said it was entirely wrong that the review had been designed, improperly designed, and the sales standards that they'd agreed with the banks were replacing the rules. And yet each bank had signed an undertaking that their review will comply with the rules. So I said, these reviews are not even complying with the undertakings that you forced the banks to sign. And this went on for some period of months where I was having these ongoing debates, and that then led to an unusual discussion with the FCA, where they asked me why I was getting involved in these issues. Now, at the time, I literally was trying to help this person out. Was a businessman I'd known for some years. I'm looking into what happened at the time and trying to investigate further. And I'd spoken to a barrister and some others who agreed with my concerns. And I said, I don't understand what you mean. I said, I'm 20 odd years investment professional. I'm seeing customers who have been absolutely ripped off here by these products and in the worst possible way, and seeing some really appalling situations. Why wouldn't I have an interest in this? And his words to me were, I don't know of any other independent financial advisor who is an appointed member of a network getting involved in these matters. Now, I thought at the time that was a very unusual conversation or a very unusual statement to make to me. And although I can't for definite say this is related, several weeks later, I had a call from the managing director of the network I was working with, saying there'd been allegations that I was selling pensions to an unauthorised firm. And when I asked him who had made the allegations, he wouldn't tell me. When I asked him what evidence they had, he wouldn't tell me, wouldn't give me any information, demanded that I meat with him in the next 2 weeks to discuss the concerns. Now, at the time, my future son-in-law was terminally ill with heart disease, and we were to and from the hospital non-stop, and we'd supposed to be go on a holiday, which we'd had to cancel. And I literally said, I can't do this in the next 2 weeks because things are just too bad. 2 weeks from now, the following month, I will be able to meet up with you. Anyway, so they suspended me, which meant effectively my income stopped and my business stopped. I wasn't allowed to speak to customers, and all without any evidence or information to back up these allegations against me. And when I threatened to then sue the network, they reinstated me, but then they then resigned me from the network for being for having a breakdown in a relationship with them, communications. So that left me in the lovely position where, having been suspended and then forcibly resigned from a network, it normally takes 12, 18 months to then go direct to the FCA or to another network and get set up. But having had that history, that would pretty much mean there was no chance of going to another network at that time. So I had to agree to leave the network. And effectively, that was the end of my role as a financial advisor. Now, I can't say for definite that is because of what was happening with the FCA, but the timing of it seems extremely unusual, shall we say.
Was there anything else going on in your world that set of events could have been attributed to, as far as you were concerned?
No, apart from the health issues of my son-in-law, which obviously were a massive distraction at that time, it was business as normal. So there was no fallout, no contentions with the network. It literally came out of the blue. And when I then agreed that I would resign and leave the network, I then got a follow-up email from where I'd raised concerns over how I'd been treated, a follow-up email from the CEO of the network confirming that there was absolutely no evidence or foundation for any allegations against me, and an apology.
What happened after that, Steve?
Well, I spoke to, as I mentioned, I already spoken to 1 or 2 barristers, or one in particular who was a banking expert, about these products. And I spoke to a friend of mine who'd recently been made redundant from HSBC, I think it was at the time. And we said, look, between us, we had some good knowledge on these products and could work with clients. So my friend set up a small claims firm, and we then went out to try and recover monies from people who had losses from these and other issues, taking on some quite difficult cases, many that were not in the review or outside of the review, but winning compensation for people. So I kind of reinvented my role to act as a regulatory consultant going forward rather than as a financial advisor.
Thank you. We're going to jump ahead to question number 11 in the question set, Steve, which is, to your knowledge, what did the FCA do to investigate the matters you raised?
I've never had any evidence that they've investigated anything. The only time I think I can honestly say that they did get involved was on one case where somebody committed suicide, and there was an issue with the home and potential loss of the home. And when that was raised with them, they were quite helpful on that one case because it was so extreme. But in terms of the other issues raised, it's hard to explain how you hit this blank wall. You know, you raise real concerns. You expect there'll be an interaction, as in you raise the concerns, they will come back to you for more evidence. You'll tell them further why you're concerned. It doesn't happen. You raise the issues. On the IRHP review, I faced nothing but obstruction. Nothing but obstruction. Now, I was quoting the correct rules that should have been applied in that review process, and at every occasion, I was being obstructed on it. And the amount of people who were just facing the same issue and being, you know, if you, I mean, my view honestly is that if you speak out and you speak out against the banks, you end up being blackballed by the FCA. But you certainly don't get any feedback about anything apart from that one case I can mention. You get no feedback whatsoever that they've done anything about what you've raised.
Steve, just for clarity here, was the suicide that you mentioned, I'm very sorry to hear about that suicide, was the suicide that you mentioned in some way related to one of these RHP cases? And if so, please tell us more.
Yeah, absolutely. What happened was, you know, I mentioned obviously that you have these credit lines, and this is a point in court at the moment where the banks are trying to suggest, and the judiciary are going along with them, that these are not real debts, which is ridiculous. They are a real live liability and affect the customer's lending, their ability to borrow, and their real liability on their credit file. So one customer who'd had quite a large business at one stage had been sold a 5-year swap, and it wasn't the biggest issue in the business. They were very upset about it because they'd been absolutely pressured into it, pursued by the salesman until they bought this. So of course, when interest rates dropped and they were paying a lot of money out on it, they were not happy at all. But what the bank had done at the same time, because this is a real liability, this credit line, they have to have a security on a first charge on an asset of equal value. Now, there wasn't enough equity in the business or business assets for them to cover that. So what they'd done when they sold them the swap, they got the business manager to go in and replace the the existing mortgage they had with a commercial loan, and that in that way they got a first charge on the home, and at the same time they got them to sign a personal guarantee for £190,000. Now, £190,000 just happens to be the amount of the credit line on the swap. Now, when I got involved, they were then trying to repossess the home because the swap had been broken, and they were trying to recover the whole £190,000. Now, I got involved and I raised the fact that they couldn't do this because MCOB rules stop a bank manager who's not authorised selling a mortgage in the first instance, let alone in such a way as this to put and to not disclose this risk. And the bank involved didn't agree with my initial findings, and unfortunately, because he thought he was going to lose the home, the person involved killed himself, and he knew that he had life covers in place that would support his wife, and left a note asking me to try and resolve the issue. And when I met with the bank and they had to admit that I'd been correct on the regulatory issues, I said to them at the time, why were you claiming £190,000? And their words were, well, we thought we were going to sell them a 10-year swap, and in the end we only sold them a 5-year swap. But we put a credit line in place for the £190,000. Yeah, and that had stayed in place. So effectively, the actual swap break cost was something like £80,000, but they had tried to claim a whole £190,000 when the swap was broken. And that's what put this couple in a position where they were going to lose the home.
I feel obliged to ask Steve, what happened in relation to that case after that?
Obviously it was a big issue at the time because there was a lot of the review was underway, and a lot of people knew about what happened, and the press very much wanted the story. But when you're dealing with banks and it comes to issues as sensitive as this, then it's best to be dealt with as confidentially as possible. So we spoke to the bank, myself and my colleagues spoke to the bank directly. We were acting pro bono for the person involved. And we said, look, obviously a lot of people want to sensationalise this, but this is about the people left behind. And we met with the bank and we did a deal, confidential deal with the bank. So that person is comfortable.
Understood. Quite rightly so. Steve, some of the next questions, I know the answers to them, but just for formality, really, I'll ask them anyway. To what extent, this is question number 12, Steve, to what extent did the FCA act promptly and effectively to investigate your allegations?
Not at all.
Number 13, thereafter, as far as you know, what did the FCA do to prevent the alleged misconduct from continuing?
I think there's one thing I've raised with them on one occasion where a whistleblowing system was not correct at a bank, and I raised it. And funnily enough, I got involved in another case and I got the updated product manuals for the whistleblowing, and the rules had been changed in the background. But again, no feedback to me. I'd done a whole report on it to the FCA to raise my concerns. I'd even taken the whistleblower affected in to meet with them, and they would not feed back to us, would not give us any further information, nothing. It's, you just hit a brick wall with them.
If you suffered detriment or loss of job, what was the impact on your personal income in each of the 3 years after you blew the whistle compared to your income in the 3 years prior to that? Obviously, we don't need to give any figures here, Steve, but just give us a feel for what the impact may have been to your employment situation and your income.
Well, as I'm saying, I'm absolutely certain that what happened back in 2014 was down to the fact that I was making waves in the IRHP review and it wasn't appreciated. And that was the end of my IFA licence at that point. Not that I couldn't possibly go back and resurrect it, but it would still be a difficult thing to do. So effectively changing careers in the way I worked, I had a position with no income for 18 months when I did that.
Question number 16, Steve. In your opinion, how well or badly has the FCA treated you as a whistleblower, as somebody who's raised concerns about these issues? How well has it protected your privacy, ensured that your career was not adversely affected, and helped to safeguard your mental health?
I think I'm quite clear on that they had a very bad impact on my finances, my position, my mental health. It was very stressful what we went through at the time, not just for me, but for the whole family. You're trying to explain to clients, some of whom you've looked after for 25 years, that you're not allowed to speak to them, let alone advise them or get involved with the finances again, even though you've done nothing wrong, is an unusual thing to go through. And when I later on reported my concerns about this to the FCA in a meeting, and I also raised concerns about a scandal in relation to the network I'd been in, where I had reported other issues that were not taken forward. I did not get a reference for either point. They told me they'd investigated one and they wouldn't respond on the allegations I made about my own career.
If you have suffered financially or otherwise as a result of blowing the whistle, how effective has the FCA been in securing redress for you from the guilty parties?
Well, the guilty party would be the FCA as far as I'm concerned. But I mean, I can give you, for instance, with other parties. I took a whistleblower in to see the FCA about 2-3 years ago, and he had been outed as a whistleblower and targeted and suspended, and therefore he had no income. We managed, Bank Confidential, a charity I work with who supports whistleblowers, Mark Wright and I, we managed to get him back on full pay and support him to some degree ourselves for a period. But I took him to see the FCA, and I said to him, they kept talking about maximum protection in this room with the whistleblowing team. And I said, look, you keep saying maximum protection. Please just tell him what that means, because this person was sat there hoping for something from the FCA. And they said, oh, well, we'll give you maximum protection and we won't let your name get out there. And I said, well, wait a minute, he's been suspended because they know he's a whistleblower. So they know who he is and they know what he's alleged. Tell him, please, beyond that, what you will do to protect him. And the room just went quiet. And he just looked at them and said, what, you don't do anything? And said, we don't get involved in individual cases, was the next words. And that was the bottom line. They do nothing to protect whistleblowers, nothing financially.
Number 19, I'm going to ask the question, although you've touched on the answer already. What do you believe the FCA could have done better in relation to your whistleblowing case?
Applied the rules. Torn up tens of thousands, yeah, it would have cost billions. at the banks, but that's what should have happened. You know, there should have been, if that review had been run properly and consequential losses had been played, there should have been, it was mooted 30 billion plus going back to SMEs. Think what that would have done for the economy. I mean, you know how much of an impact it's been when PPI payments have been made. But you think SMEs having tens of billions returned back into that business stream after such a difficult financial time would have been huge for the economy. But they didn't. They sat on their hands and let the banks keep the money after absolutely appalling mis-selling and deceit.
Question 21 we're going to, Steve. What are your thoughts on whether the FCA lacks the powers that it needs, or conversely, that it doesn't make good use of the powers it already has?
It has the powers it needs. It just dances around them. You'll hear Andrew Bailey was forever talking about the regulatory perimeter, and I would try to explain to people that the FCA, you don't have to have a regulated investment product. The FCA can act on unregulated, they can act on anything where people are selling investments. And all this hoo-ha when there was things about fixed rate loans and whether they're regulated or not was ludicrous, because as I kept saying to the FCA back then, you will act, you'll put land bankers and other investment what you say scammers, into prison and pursue them through the courts under the rules, and yet the very same mass selling of bad investments that people are losing money, you won't touch at the banks. So they had the approved persons rules. There was numerous rules in there where they could take criminal action against directors of banks and large firms. They won't touch the banks. They'll take small firm IFAs on, one-man bands, smaller people who are not regulated. They have the powers and they choose not to use them. To suggest that they couldn't get involved on RBS GRG because it's not a regulated area is ludicrous. All financial services firms work under the principles, and the principles of treating customers fairly, being honest, being transparent. The FCA can take a license away based on breach of those principles. So tell me why it doesn't have the powers.
Thank you, Steve. Number 22. In general terms, what's it been like for you to deal with the FCA?
Hugely disappointing. You know, up until dealing with them, you had this idea that they were this kind of FBI type organisation in the background, really there to keep the financial services market clean. And then what you do realise is that you've been made to jump through hoops following thousands of rules for years, while the larger organisations like the banks will just cut a deal with the regulator, mis-sell non-stop, and pay a small amount of the money back when they're caught out. You realise it's an entirely two-tier system, and that effectively the regulator is there on one hand to attack the smaller business people, but on the other hand, mainly to protect the city, and that means to protect them from redress and compensation demands as well.
What's your perception of the culture of the FCA?
I think the culture, I suspect there's a layer of cultures in the FCA. That we have had whistleblowers who've confirmed some very interesting points about the FCA and how they operate, and what cover-ups have gone on there. And I'm sure there's a lot of genuine people in there probably attempting or thinking that they're attempting to do the right thing. I think at the executive level, it is untrustworthy, to say the least. I think at the highest level, and what they've done in the last few years, people who've been involved in some of the largest scams, financial scams in this country, such as the asset protection scheme and the sales of RHPs and fixed rate loans and such like, people who've been behind that or the cover up of such, have then gone on to be the chairman and CEO of the FCA, the PRA, Bank of England, head governor of the Bank of England. It's the same people who have allowed all these things to happen, who then go in to run the boards that decide to do nothing.
Just to clarify, for those that don't know about it, could you tell us what the asset protection scheme was all about?
Yeah, around the time the bailout of Lloyds and RBS, the boffins working with the government came up with this lovely scheme that what we naturally need to do to sort the balance sheets out is get rid of loads of debt and get rid of loads of security. And so what they did was create what was called non-core areas. So this didn't mean you were a bad business because you were non-core. If you were in building, you were non-core. If you were in leisure, you were non-core. If you hotel industry, you would be non-core. If you're in development, you would be non-core. So no matter how good, bad, or indifferent your business was, you would become non-core. And what that then meant was they didn't want your business anymore. So originally there was 600 billion of loans between Lloyds and RBS that were set aside to go into the non-core area. And if you then went into non-core and then transferred into the asset protection scheme, the bank would put you into the APS. It was like a large insurance scheme with a 20% haircut. They could then claim on the insurance if they're lost on your company going under or on your firm. But what people didn't realise is that if you were in the asset protection scheme, the asset protection agency who ran it effectively had stepping control over your company. You couldn't sell assets from your company without the approval of the asset protection agency. You couldn't bring in new shareholders or restructure your business without their approval. And you couldn't have new monies or borrow further without their approval. Except the downside to this was, whilst the banks knew you were in it and HM Treasury knew you were in it, they wouldn't tell the customers whether they were in it or not. Back then, and this ran from 2009 to 2012, 3 million customers from RBS alone, they still won't tell you if you were in that scheme. So for years, you might have lost control of your company. And I've seen it time and time again, people going back and saying, can I borrow that further money now? And getting told that there's a problem or there's an issue or we can't quite get it or end up going under and effectively never realising the fact they've been shadow directed for 3 years before the company went.
Steve, I must ask, if you were challenged and said, Steve, can you provide evidence to support what you're saying? What would your response be to that idea?
Let me start with my own example, a very small example, but back then I was also doing some small town developments, and I put some land from my garden into a separate limited company and built 3 houses on it. And during the development, well, initially I was supposed to start off with £110,000 from the bank, and I had no personal guarantee. And this was just around that time in 2008 when this was happening. And I had the builders ready to go on the site 3 weeks in a row, and I kept not getting the funds drawn down. And there was excuse after excuse. And then the bank manager turned up at my property, and the £110,000 had gone down to £40,000 to start the scheme off. Well, I owed more than that to the architect and the builders and the work that had already started. And I had to sign a £270,000 guarantee on the spot. Otherwise, they wouldn't even provide the funding. And that was after the work had started on site. Yeah, and then during the project, on several occasions, they tried to bounce checks or not make payments. But we managed to get the properties finished, and my wife and I decided we would buy them out with the market being so low at the time, put 3 mortgages in place, and we had to threaten to sue them to let us buy the properties out for the money we owed them. My lawyer literally, they literally wouldn't take the money off her. They were more adamant they wanted to fire sell the properties and come after me for the personal guarantee. And she had to threaten to sue them to get the properties released. And that sort of situation has been repeated on much higher levels across the board, where time and again, people were simply trying to refinance or get out or create a way forward, and the banks stopped them doing it.
Thank you for that elaboration, Steve. Thank you very much indeed. Have you ever complained officially about the FCA? If so, tell us about that.
Yeah, on several occasions. I brought an official complaint against, it was Andrew Bailey's team that I debated this with, where Mark Wright had been named, who worked with him at Confidential, named as a whistleblower. We believed in an email that had been released under a DSAR, a data subject access request. And the FCA were adamant that they hadn't named him in this email, but then very kindly told us that they had named him on a previous occasion. And this was when he was whistleblowing a market abuse statement at RBS back from 2008. For 5 years, he tried to expose this, and the bank consistently denied the fact that a market abuse statement had been made, but clearly it hadn't been hidden. And when they then confirmed they had named him, so at the time when they thought he was still working at RBS, they named him and his allegations direct to the bank after his MP chased them up to find out what was happening. And they then suggested there was nothing wrong in them doing it. So we said, well, this is a breach of your rules, because when somebody comes to you, they come anonymously, and you should keep them anonymous unless you've agreed with them. otherwise, and that they argued with us for a year, literally a year on this, before in the end the Complaints Commissioner decided against the FCA and said they had to apologise to Mark. I mean, it was just ridiculous. And since then, we've raised further complaints because we found out that the FCA had lied to Mark and Sir Norman Lamb, his MP. They told him that this statement Mark had spoken about didn't exist. They'd asked RBS, and RBS said, no, it doesn't exist, and they've looked for it and they can't find it. And then Mark had done a DSAR to the Complaints Commissioner while we were having this old whistleblowing argument, and in there he got emails back saying that we found the statement Mark Wright mentioned, and it would seem to back up what he said. And so we over a year and a half repeatedly raised the fact that they misled it with them, and they wouldn't meet with us, wouldn't discuss it, kept saying it had been dealt with previously. Well, how could it have been? We'd only just found these emails. And then when we put a formal complaint in to say that they'd misbehaved, they then turned around and said, well, you're out of time because you should have brought it to us within a year. And we said, well, here's like 11 emails and contacts where we'd bring it to you. So they cannot be trusted at all when it comes to their own complaints processes.
Question number 25, Steve. Overall, what have been the consequences to you and in your case, your family, as a result of what's happened?
Well, I think, you find ways to move forward. It was, I say, we went through a very stressful time at the time that I stopped being a financial advisor. It was a very stressful couple of years and very difficult one. And, for myself, I found it was quite depressing having lost your license or having to give up the license in the way that I did, having done nothing wrong after advising for so many years and not having any issues with the advice that I'd given to people, and having gone through the credit crunch and all the rest of it without people losing money or having had them in the wrong investments or anything else. So you only would have to ask any member of my family the stress that the FCA, of course, you probably just have to mention the words FCA in or around any of my family to know what kind of feedback you might get.
Thank you. Number 27. Number 26, Steve, apologies. What would be your advice to somebody thinking about blowing the whistle to the FCA on a matter to do with misconduct in financial services?
Well, what Mark and I do through Bank Confidential is we give people an opportunity. We're dealing with several at the moment where if they're going to blow the whistle, we suggest they come to us and we will put their allegations forward for a whistleblower, but in such a way as to keep them anonymous. What we would always say is do not approach the FCA and give them your name or any details, because trust me, they will go to the bank directly and ask questions about it. They don't have to keep you anonymous, and you've got to insist on it when you go to them, but even then they can still breach that. So my advice would be, if you need to whistleblow, get expert advice first. Come to someone like ourselves or people like Nick Wilson, Mr. Ethical, people who really understand how this works, and get advice on what your risks are by actually speaking up at all, because the risks are very high.
Thank you, Steve. Question number 27. If you could change 3 things about the FCA, what would they be?
No FCA would probably be the starting point. The FSA became the FCA. The FSA got everything wrong through the credit crunch, and they just carried on being what they are. If it was a case of we have the FCA still in place, I think what I would change would say, well, look, they might do a job protecting the city, because we have global issues to consider and we have global frauds and all sorts of other things. So they do their job there, but they are not fit to work with or protect consumers, and they're too conflicted by their close relationships with the banks. So I would be suggesting either, rather than 3 things, 2 things, either no FCA and a complete replacement of the current regulatory system as it stands, which is between revolving doors and close working relationships. The regulators are just too captured. Or, as I say, allow them to look after the city and create a new independent regulator purely to protect consumers and SMEs.
Number 28, Steve. What positives are there about the FCA that you'd like to talk about?
My answer.
I'll move on to the next question, Steve. 29. What do you think about the possibility of conflict of interest issues at the FCA? I appreciate you've touched on this already, Steve, but perhaps you'd like to elaborate.
The revolving door issue is huge. I can't suggest it was in any way down to what he did or didn't do on the IRHP review, but the majority of complaints that were coming in about RBS. And then when you find out that Mr. left the FCA a year or so after the review finishes, it leaves a very bad taste in a lot of people's mouths. And that revolving door, you know, Charles Randell, Slaughter and made, was it 35 million in a couple of years, advising HM Treasurer on how to set up all these abominable schemes like the asset protection scheme, and then ends up going in as the chairman of the FCA. They are conflicted at every level, because ultimately people in banks are going to get paid substantially more than people in the FCA. And if you do a good job protecting the banks you're dealing with, or certain people at the right level in those banks, you're going to get a reward for it. And it's not right. They'd have to stop this revolving door.
Number 30, Steve. Do you believe there should be spot checks by the FCA on regulated and or unregulated entities, perhaps similar to the kind of spot checks carried out by VAT inspectors?
Absolutely. And you've got to bear in mind they do at the lower level. You know, when the credit crunch happened, I mean, there were things like products like key data that had been missold, and you know, there were some spot checks even just on local firms in East Yorkshire, and some firms were just shut down overnight because the compliance was so wrong, and they couldn't explain why they sold what they sold. But I remember when I went to and said I couldn't understand why checks at the banks on the files for these swap sales had not picked up any issues. And his words were, I don't believe we do anything so granular as to go in and check the bank's files. So even when you had the review up and running, the FCA had not sent a team in to go through those files to see who was doing what, how and where, and how it complied with the rules. So you do have spot checks, but you have them at the lower level firms. And they have what they call arrow visits, where literally the FCA can literally just turn up. And I've known it happen to numerous people, but it doesn't happen at the higher level in the banks where all this mis-selling is happening.
The FCA is undertaking a transformation project. Do you have any comments to make about that?
I don't think the FCA should be allowed to undertake anything to transform itself. I think you need independent parties to come in and properly examine what's gone wrong in there. It'll be wallpaper again. It'll be a whitewash. It'll be the usual scenario. We'll have an FPA next after an FSA and an FCA. They'll change a word around in the title and suggest we got a lot of things wrong and we're changing a new body again. It's a waste of time.
Final question. Is there anything else you'd like to talk about, Steve?
No, I think in relation to the FCA, I think any one of us who've had long ongoing dealings with them realise there is a real problem at the heart of financial services in this country. And I think, we cannot on the one hand suggest that we've got good regulators while we sit there as the largest money launderers on the planet, still laundering for Russian and Mexican cartels. We have huge fraud, deceit, deception and criminality happening in 1 square mile in the city. And the FCA are doing little or nothing about it. And so if I had any one thing to say, I would say it's about time the city or the square mile was thoroughly and properly investigated by an independent regulator.
Steve Middleton, thank you very much indeed for your conversation with me today, which, as you know, has been recorded and we'll be placing on the APPG's website. And also thank you for your written submission too. We'll wrap it up there. Steve, thank you very much indeed. Thank you.
Thank you.